There's a line in buying a company, and that is sometimes you buy a company and then you realize the company you just bought.
But what if the new owners don't value us?
We win, you win. Growth is giving the past a runway, not erasing it.
Part of that has to do with personnel, because you really get to have much more intimate conversations with people and about how things work.
As Derek might have told you, we want to align incentives so that we win together.
That's very generous. Thank you. But what if we don't have the liquidity to fund? Can you provide a loan to fund the co-investment? Also, am I still able to take a month off in the summer as I have for the last 5 years?
Is it a red flag that Reggie is both asking for a loan and asking about his month off? Yeah, it is. The fact that he's trying to protect something that he clearly knows is at risk is a little off. I think Reggie should expect that to be reduced. You can't make decisions with one red flag. You have to just dig in a little bit. That would be something I'd want to understand. And I think Marla would be in a position to talk about that, and we can kind of maybe anticipate a little bit more where this is going.
Every private equity deal has a backstory. Some brilliant, some brutal. As the deal turns, shares dramatized anonymous stories from private equity trenches. Then we break them down with operators and insiders. It's like the Harvard business case study that never made it past legal. The following dramatization is inspired by a real transaction, with key details altered to protect the identities and privacy of those involved. While names, dialogues, and certain scenarios have been fictionalized, the core dynamics and challenges reflect true events in private equity deal-making. This case is presented for educational purposes only and does not disclose any confidential or proprietary client information. Any resemblance to real people, companies, or events is purely coincidental. Our goal is to explore the strategic decisions that shape deals, not to disclose or reference any real transaction. Now let's get into today's case.
This is As the Deal Turns, decoding the people and motivations behind private equity deals. Most stories start with numbers, margins, multiples, and growth curves. But when a family-owned company sells to a local private equity firm, the story of change is how the organization evolves, professionalizes, and the impacts on the company and its clients. At Iron Air Services, the question wasn't just, what changes under new ownership? Ownership changed. Would the operators become owners too? Welcome to Episode 2, Part 1, Private to Private Equity. Before we
get started, it's probably, no good podcast carries any weight without a massive disclaimer, which I'm sure you appreciate. It's important to understand the genesis of this podcast and how it's evolved, even in between Episode 1 and Episode 2. We've realized, and this is something we realized very early on, that the real stories that we want to share are the human stories behind private equity. I think there is actually a lot to be said about how the change in ownership and change in management that often comes alongside of those changes in ownership can impact the lives of the people involved. And it's not just the transaction itself, it's all the things that happen from the very beginning of a seller looking for a buyer, the people involved in that process, and ultimately the decisions that have to be made through the sale with the people involved. We wanted to really capture that in our podcast and to build the stories for those people. And so hopefully we deliver. As always, we are always interested in talking to private equity owners and or operators of private equity backed companies for their stories so that we can anonymize those details and have them show up in our episodes. We're looking to hear from you about your experiences. And of course, feel free to comment on the story and your take on it.
Before we step into today's deal, meet the company at the center of it all. Iron Air Services, a third-generation commercial HVAC firm built on trust, grit, and old-school loyalty. Family-run to date, Iron Air has what sponsors look for: strong margins, a significant customer base that appreciated Iron Air Services' rapid response and quality work, a management team that knew every rooftop unit in the greater Western Chicago area. But there was no plan to scale beyond Chicago's western suburbs. The third generation didn't want to reinvest in the company and grow it the way the management team knew they could. That's where the new sponsor steps in, Monroe Family Capital. MFC, a disciplined family office funding the acquisition and tapping a proven operator to lead once the deal closes. The numbers are penciled, the term sheet signed, and the closing clock is ticking. Belief has to be earned before the ink dries.
All right, so before we get into the deal details and the cast of characters that are engaged in this transaction, we were introduced to the family office, Monroe Family Capital, MFC. And by way of background, I ran a family office for a period of time, actually a prolonged period of time. And as they say in the family office space, if you've met one family office, you've met one family office. And that is, every family office is different. One of the key components to understanding how a family office runs is what generation you're talking to. Are you talking to generation one, or first gen, second gen, or third gen? And the profiles of the people involved in the family office often follow the following path or arc. Gen one, the generation that created the companies or generated the wealth for the family, is a risk taker. And they have absolute confidence in their ability to take risk because they know if they lose capital, they can make it back. And so oftentimes if you're dealing with Gen 1, they are very much hands on the wheel type operators because they are the ones that built the company from the very start. If you're working with Gen 2 and or you're trying to communicate with a Gen 2 family office, what you'll often find is that Gen 2 is the steward of the execution of Gen 1. In that they've institutionalized or figured out a way to institutionalize their predecessors' efforts. This could be going public. This could be focusing on operations and sort of institutionalizing and upskilling all the people on the team. And if you're talking about Gen 3, oftentimes those people are stewards in a different way, in the sense that they're trying not to lose what grandpa and mom or dad stewarded. And many times they don't necessarily have the skills to do what grandpa did or grandma did. They tend to be more risk averse. So I always find it interesting when I'm talking to people about family offices and they're very interested in talking to them, especially if they're independent sponsors. You know, how do I talk to them? What should I say? And the first thing I tell them is understand what generation you're talking to. With all that being said, it is interesting to know that Monroe Family Capital is the capital behind this acquisition. Not every family office makes direct investments in deals. This is a unique bird here in Monroe Family Capital. As a deal dork myself, it's always fun to talk about the numbers. The purchase price, I think, was 5.5, 6 times. West side of Chicago, HVAC. HVAC acquisitions are really popular these days. Obviously, not a bad business to get into. AI isn't taking it out. It's a trade business with a technical approach, right? It's fundamental. And you'll know that if you lose your air conditioning at any time or your heating, especially in the western suburbs of Chicago. This is not a huge deal. It's a sizable deal. And it's interesting to note that there's a gap related to growth, which is stereotypically a deal that private equity likes to get involved in when the owner, founder, or the operator isn't focused on growing the business. It's more a lifestyle business at that point.
Marla Jennings and Reggie Thomas have worked side by side for a decade. Trusted voices, different lenses.
First time with PE, sure. But look around. We've run on duct tape and grit for years. Maybe now we get real systems, better tools. Jerry took good care of us, but at the end of the day, he was spending more time at his kids' soccer games than at the business. And instead of investing in the business, he was building his kids' trust funds.
But what if the new owners don't value us or understand our value? There are no guarantees of employment. What if they want wholesale change?
If they want us investing, that means they want us in the boat. It could be our shot at real upside.
True, but if we invest and they then let us go, our money is tied up, and we don't have a job.
Marla is playing scared. Why is she so worried about having a job?
I'm not really sure what to do. The new buyers say I'm important to the business. But how do I really know?
One hopeful, one cautious. Same company. Change hits people differently.
So it's true that change hits people differently. When I think about Reggie and I think about Marla, what I see in Marla is someone that doesn't fully understand her value. When you don't know your value, change can be scary, especially when the fear of what happens when a new owner takes over sort of takes hold or sort of becomes a part of your reality. The backstory behind Marla likely is that she spent probably a decade or more at this company and doesn't know what the marketplace has in store for her should she have to find a new opportunity. My sense is she's more valuable than we even know, but we'll find out more later.
Derek Hale, the incoming CEO, knows this conversation matters. Marla is the company's compass. Loyal, careful, protective.
Jerry was a fantastic owner, but one of the things we noticed was that he seemed to be losing interest. He just didn't seem very involved like he once was. And clearly selling it suggests we were right. But I know how good Iron Air executed. I lost so many deals to you guys when I was running Combust Air a few years ago. But I never thought Jerry was generating that success. I knew it was you guys. We really want to align our goals with yours, which is why we are offering the management team the opportunity to invest. Also, a growth strategy will need some new tools too.
Jerry never really gave us that opportunity. What do you mean, new tools?
Ever heard of EOS?
No.
EOS stands for Entrepreneurial Operating System. It's an organizing discipline for growth. Weekly scorecards, quarterly rocks, clear accountability. It doesn't replace culture. It helps culture scale.
So we're not tearing down what we built, just putting rails under it. And we're aligning interests with ownership?
Exactly. We win. You win. Growth is giving the past a runway, not erasing it.
If I say yes, I have to explain it at home.
True alignment demands commitment, a two-way street. There's a leap of faith for those who just showed up for the job.
Yeah, so I think it's playing out here what we imagined, which was Marla actually has talent. And I think she's realizing what's been missing in a way, which is alignment between ownership and management. There's a line in private equity which goes, if you're trying to find out what's going on in the company, follow the incentives. And there's no stronger incentive than having your management have a stake in the business, because that's really what investors and private equity are investing in, is the business as a whole, the enterprise value. Now, that might not be enough. We'll see how Derek and Monroe Family Capital sort this out. But in a founder-led company, oftentimes the incentives aren't completely aligned, not in a way a professional owner would have them. And so this is where people's eyes start to open up and see the possibilities with private equity and the opportunities for truly talented people to garner their true value in an organization.
If your PortCo is behind on initiatives, drowning in backlogs, or your team's stuck filling gaps themselves, this is your fix. Kayana embeds PE-literate remote professionals, trained, AI-ready, and scoped for impact. Close your books faster, clean up CRM, tighten order to cash, all without adding payroll. Built by a former PE-backed operator, Kayana moves at your pace. No drama, no dead weight. Get the talent that ships. Preview how it works at hirekayana.com.
Numbers tell a story. The people who live them ask different questions.
Reggie and Marla, it's great to finally meet you. Derek has told me a lot about how Iron Air executes, and you both are an important part of our investment thesis in Iron Air. As Derek might have told you, we are a unique type of partner in private equity. As a family office, we take a very long-term approach, much like Jerry did, but we have a number of business practices that we have found to be important to building businesses. In your case, we want to align incentives so that we win together. Accordingly, in addition to allowing you to invest up to 5% of the equity, we propose a matching 5% phantom equity pool that vests over 3 years, but only if you put some skin in the game. This is in addition to standard performance bonuses, of course.
That's very generous. Thank you. But what if we don't have the liquidity to fund? Can you provide a loan to fund the co-investment? Also, am I still able to take a month off in the summer as I have for the last 5 years?
Reggie, we are open to considering a potential loan arrangement, and we can extend you a loan 1-to-1 for the amount of money you contribute. As for the month off in summer, we might have to review that under the assumption that the summertime is important to growing the business.
So you are willing to extend a loan 1-to-1, and you are giving us phantom equity 1-to-1. So in essence, we are getting 4-to-1 leverage.
Yes, that's right. You put in 2.5% collectively, and when you are fully vested, you'll have an effective ownership of 10%. But it is important to reiterate, our focus is on building this business, and we need people on the team who have that same vision.
That's right. As Derek mentioned, growth is the goal, and we all win when that occurs.
An attractive proposal for the management team for sure, if they are focused on the goal. No more summers away for Reggie.
Did you like how Reggie asked for a loan and at the same time asked if he still gets to keep his summer vacations? This is where the rubber meets the road in private equity, and that is private equity buys companies that are stagnant. And it actually is a great strategy to buy sort of a lifestyle business or a business that just doesn't know the way forward for where it's at. And that's certainly true in those lower middle market. But you can see how people are trying to understand their interests and or the implications of the change on them. Marla's eyes are sort of opening up wide now. She's like 4-to-1 leverage. That's amazing. When she was probably coming hat in hand to the end of year performance review, hoping that Jerry, the owner, was going to be generous this year. But now she's understanding, and someone's effectively set up for her a strategy or a game to play where she can go 4-to-1. That's an amazing opportunity and not one you should be asking about vacations around. And clearly, Alex, the operative family office, was ready for this question because he had it all teed up and he was ready to give the loan because he probably anticipated that maybe some of the managers didn't have a program in place already or didn't have the capital to participate. That's a smart move by them. It's not a giveaway. It's not a freebie. Obviously, you have to still outperform the cost of the interest. It sets up the incentive structure that they had envisioned the company. I'm sure there's probably a lot of other incentive options available to them, but I think this is sort of interesting to see how this plays out.
The real negotiation often happens far from the boardroom.
They want you to put money into this?
It really is an attractive offer. We, you and me, can end up owning 5% of the company. You know I've always wanted to grow the business, and now we can get paid to do it. I think I can double the company, which means we'll own 10% of today's company. That's more than $1 million. Not sure if Reggie is up for it, though. His summers are pretty important to him.
You know I believe in you. How important is Reggie, and how much of our savings should we really commit to this? Also, how long will the money be locked up? I GPT'd what a family office is, and it said they invest for the long term?
Yeah, they said that in the meeting.
Yeah. Well, what exactly is long term? Can we get the money back if you leave or if we want to sell?
Good point. I'm not sure. I was planning on retiring in a few years. I'm not sure how this all connects.
For Marla, the choice is personal and professional. Retirement versus a final payout. Long-term versus short-term. Marla is what makes a good deal great. And finally, interests align. But maybe a little too late for her? The answer won't come from a model.
So the human side of private equity doesn't all happen in the boardroom, as the narrator said. Sometimes it happens at the dinner table because you really need the support of your spouse and your family members to participate and to take the risks that are available to you in private equity. It's interesting to think that Marla felt underappreciated and is sitting there going, I could double this company. You know, it make you wonder why she wasn't the buyer of the company and why she didn't line up the capital and why she couldn't have the promote associated with buying this company. And I think this might just happen to be because Marla didn't know any better, or maybe didn't know that the business was for sale, or didn't realize that she was part of the deal that was being marketed. I think it's probably useful for operators to understand what they're capable of, what they could sell, and so on, and effectively put themselves in business as a private equity owner. I'm suspecting that Marla is going to get smart to this over time, but she has something to prove, I think, and that is her ability to operate and execute in this new system and with this new growth opportunity. And it's also interesting to think about how, depending on when you catch someone in their life cycle, a deal can be impacted. Hopefully Marla's up for it, because if she is, Derek obviously knew something about Marla coming in, and that's what attracted to him to the deal. Iron Air was driven and was winning deals because of Marla and Reggie and their team, not because of Jerry, sort of the absentee owner. But as Marla develops in this role, she might find opportunity. She's unsure of whether Reggie's along for the ride or not. And hasn't really responded to whether or not that's going to affect her thoughts around her investment in the business. But she seems very confident in herself. And if she's able to double the company, I mean, this is why good operators are gold, and why buying at the right time and understanding the dynamics of the owner is important to making a good deal great.
Private equity deals don't hinge only on capital structure. They hinge on timing, talent, and alignment. It's what makes private equity a wonderful creator of wealth, constructive capitalism. But not everyone is ready for that change. For Reggie, new ownership feels like an opportunity. But is he ready to give up his summers and be under the scrutiny of a private equity partner? For Marla, it finally gives her the opportunity her talent deserves. But is she willing to push off retirement for a big payout along with the risks of doing it? For Derek, it's knowing when to buy out a sleeping giant through the experience of competing against it, and knowing what or who is driving the value. And for Alex, it's providing the confidence and support to make sure that when timing and talent align, the resources and incentives are there to take advantage of it.
It's really interesting to think about the formula of private equity and its importance to the economy more broadly. And I'm speaking here of some of the bad press that private equity gets from time to time. And it's questionable as to whether or not private equity will find a new way to just talk about itself and what it does, just because of the bad press that it's gotten over the last 5 or 10 years. And there are certainly bad actors here who buy companies and sort of strip them down and kind of destroy the company and the jobs that came with it, unfortunately. But there's so much good that comes out of professional ownership and management that I think is on display here, where Jerry was giving up opportunities and leaving his team wanting, probably one for compensation, but also two for fulfilling their capabilities and expertise. There is a beauty in that should not be lost. Private equity is a vital part of a well-functioning economy, and it's only natural that businesses and assets change hands. It's good to know that when there's an alignment of interest between ownership and management, and the timing's right, great things can happen. I guess we'll see over the life cycle of Iron Air where this goes. Based on what I know and what is sort of evolving, I think I've identified 3 key players. One is Marla is key to the performance and the history and how we do this, a part of the business. And it seems as though Derek has identified her as a key to the deal. Whether Marla knows how key she is yet is to be determined. But you have to have the right type of capital and the right type of disposition to be a professional owner too. So I like Alex, I like Derek, I like Marla. Reggie's probably very important too to the day-to-day operations. We don't really have all the details there. What I don't like is that he's focused on lifestyle. In many ways, Reggie is like Jerry, in that Jerry is hanging out at the soccer games and basically padding the trust funds of his kids, which should have been capital to grow the business. Jerry, on the other hand, is thinking with a different form of wealth, which is his time. And he's basically bought himself a lifestyle that he enjoys, but that's not in the best interest of Marla for sure. It probably isn't in the best interest of the business. As they say, grow or die. And what this business is has been in stagnation mode, it appears. Well run and very efficient, but not growing. I think Reggie's at risk here. I think Reggie is going to decide for himself how at risk he really is based on his needs to maintain his lifestyle.
Thanks for listening to As the Deal Turns. We'd love to hear from you. If you're an independent sponsor, a private equity investor, or someone who's had experiences inside a deal and want to share your story, we'd love to feature you on the show. We're always looking for storylines and perspectives that bring the human side of private capital to life. If you'd like to join us as a guest, share your experience, or even explore sponsoring the show, reach out at asthedealturns.com. We'd love to connect and keep these conversations going. Next time, signatures hit paper, dashboards go live, and promises get tested. Watch out for the next episode right here on As the Deal Turns. Follow so you don't miss it.